Today we're going to provide some additional information for medical professionals and the financing terms that go with that. So how can we help you learn a little bit more about financing and making that work with a mortgage lender in the Iowa City area? I have a good friend and colleague, Pete Johnson, is here today. He's got 22 years experience. He works a lot with the doctors in the local area, along with the state, with GreenState Credit Union, and excited to have him here to answer some questions for our local professionals in the medical industry. Pete, can you give us a little bit more information about how do people qualify for a mortgage, and who is the medical professional who qualifies for that?
Yeah, it's actually a pretty broad range of people that qualify. So anybody that's a medical doctor, an attending physician, med fellow, med resident, nurse anesthetist. We've got physician assistants that we do a lot of loans for, all the way down to chiropractors, veterinarians. It's pretty open. Each financial institution is a little bit different in what they allow, but you'll find that pretty much there's a pretty wide range of people that'll qualify. So
great. And so what would you say are the biggest challenges in trying to get someone qualified for a mortgage with GreenState?
Yeah, that's the thing. So when we're talking about qualifying for a physician loan, we're kind of comparing a little bit to how you qualify for conventional loans. So a conventional loan is anything that's backed by Fannie Mae and Freddie Mac, kind of the two great big huge mortgage giants that back all conventional fixed rate loans. So this would be the normal loan that kind of anybody gets, a non-physician loan. And the biggest challenges there are a number. There's a down payment requirements. Typically, you want to have 3 to 5% down. The physician loans will typically allow for no money down, or allow us to do 100% financing. Debt ratio is a problem. Typically, when med fellows, especially med fellows and med residents, are coming out of either med school or fellowship or residency, they're coming in with a lot of student loan debt, right? They may have $200,000-$300,000 in student loans, and on conventional loans, we have to count those payments, even though they may be deferred. The loans may be forgiven later. And that can cause some issues qualifying for a conventional fixed rate loan. Logistically, just the timing of coming in. Typically, you have to close on a house. You have to be closed at least 90 days from the start of your job. And a lot of residents, physicians that are coming in, are taking maybe anywhere from 60 to 90 days all the way up to maybe 6 or 7 months before they actually move in. So if you're outside that 90-day window, you're not going to qualify. And so logistically, it kind of helps you get in here, get moving a little bit faster. The other big one that we find a lot is physicians that are coming in where they are joining a practice. So maybe you're not joining a hospital that has like a base salary. Maybe you're going to be here for a year with a base salary, but then your contract has you moving into production, what we call production bonus, where you're getting paid based off the number of patients you see, the number of surgeries you do, whatever it may be. That can be tricky because conventional fixed rate loans require a minimum 2-year history of that income. And so that can be a disqualifying factor on a conventional loan. So it gets really frustrating. I have a lot of doctors that will ask me like, hey, I've graduated from med school. I did my fellowship. I've been in school a million years. I've got a lot of debt, and I can't qualify for a loan. How is that possible? That's where the physician loans come in. They kind of help alleviate those with more flexible guidelines. We can do 100% financing. We don't necessarily care if you have a 2-year history of that production bonus income, and then down payment requirements are very, very low. So it really makes it a lot easier to qualify, and that's where a lot of the value is in physician loans. So
awesome, really good information. Not having any money down and being able to wipe out that debt just really makes a difference for someone who's been working hard to get where they are, and,
for sure,
and not have it work against them.
Yeah, absolutely.
All right, Pete, can you explain to us what are the loans available for the medical professionals that you provide?
Typically they're about the same as the normal conventional loans. So you still have kind of your standard 30-year fixed rate loans, your 15, 20-year fixed rate loans. A lot of times with physicians, we're using what are called ARM loans, or adjustable rate mortgages, which means the loan is spread out over 30 years, just like a 30-year fixed rate or a 15-year fixed rate would be. But the interest rate's only locked in for a set period of time, either 5, 7, or 10 years is kind of the typical increments where the rate can adjust after that initial fixed rate period. We're doing those a lot, primarily because the rates typically are a little bit lower. And a lot of times, especially if you're an incoming med fellow or med resident, you're only going to maybe be in the area for 3 to 5 years, maybe 6 or 7 years at most, and then you're moving on to your attending position wherever you wind up. So that can be an advantage, but not a huge difference. The biggest difference, kind of like we talked about, is in the flexibility. So it's the flexibility of these programs versus the conventional loans in terms of underwriting that kind of would make the difference between qualifying and not qualifying. That's where the real advantage is.
Nice, nice. So are there costs that are required with that? What do those look like?
Yeah, so typically the costs are about the same as conventional loans as well. So we're really lucky in Iowa. I do loans all over the country in all 50 states, and so I get a chance to see a lot of the closing costs and taxes, insurance, transfer taxes, things like that that are required in other states. We're really lucky here in Iowa in that we're probably the cheapest states or one of the cheapest states to do a real estate transaction in. So typically your closing costs, if you're working kind of in our local area, should be under maybe $2,200 to maybe $2,500 in total. That's kind of your hard cost to do the loan. You'll have some taxes and insurance on top of that, but they aren't really too bad. But there's really no difference between the two when it comes to closing costs and in rates as well. So in rates, a lot of times even the physician loans are actually slightly lower than the conventional fixed rates, but typically they're kind of in the same ballpark.
Awesome.
Depending, of course, on credit, down payment, things like that will adjust your rate a little bit, but otherwise pretty identical. So
awesome. So can you tell me a little bit more about why is it better to use or what are the advantages, I should say, about using an in-state lender versus an out-of-state lender?
Yeah, local is usually better. You're using a local bank, credit union, regional bank. The biggest thing probably is cost. I find a lot. So when you're working with out-of-state lenders or larger banks that are coming in from out of state, nothing wrong with those institutions, but they're typically pricing their interest rates, their closing costs nationally as opposed to locally. And especially in our market here in Eastern Iowa, it's a pretty cutthroat market. We're all competing with each other. Bank-wise, credit unions are all competing with each other, and that keeps costs pretty low. So there's not a lot of what I call junk fees in there. We're not charging a lot of points origination fees, and you'll see that in a lot of the rates. You might have a bank that, an out-of-state bank or credit union that's offering a super low rate, but then the closing costs are like 4 times higher. So that's one reason. Our rates tend to be pretty cutthroat to the bottom. There's not really a lot of junk fees or margin built in there. The other big thing, and I think kind of the bigger thing, is that when you're working with a regional local agent, local loan officer, I should say, or realtor for that matter, they know the market the best. I've been doing this for over 22 years, and I know pretty much everything about it. We have relationships with all the title companies, with all the realtors, with the appraisers. So if something goes wrong, especially when something goes wrong, we always say that when things are going great, anybody can do things when things are going easy, but it's when things go hard. So when we run into an issue, a title issue, something like that, we're going to be able to fix that for you a little quicker, get you to closing a little quicker, and at the end of the day, we're more invested, in this market. Our reputations are in this market. So if I screw up a deal for Maria, for example, I got to see her at the grocery store every day. So I'm highly incentivized to make sure things get to the closing table smoothly. So
yeah, and there's a whole lot to be said for those relationships, right? Making sure that we can feed each other and make sure that we're all doing our job to get to the table to really serve our clients at the end of the day.
Absolutely, yeah.
Well, if you haven't checked out Iowa Med Community, now is the time. So iowamedcommunity.com is really going to give you more information about our area and how you can learn about who we are, what we do, and the place that we love. We really enjoy working in this area. And I'll ask you, what is your favorite part about being in the Iowa City area?
Yeah, I love Iowa. I love Iowa City. Met my wife in college here at the University of Iowa, and we both graduated from the University of Iowa. Decided to stay here, raise our family here. Huge Hawkeye fans. The biggest thing that we love is it's kind of we always say that this town has sort of a metropolitan feel, a big city feel, without all the big city problems. It's safe. You don't have any traffic. The schools are great. There's lots of stuff to do. Culturally, it's awesome, and so it's just a great place to be. Great place for families, especially. So
yeah, I would second that. All the things that you said. We really are so lucky. We always say it's a big small town, and so there are so many wonderful amenities, and yet we can see each other at the grocery store to know if that deal got done. So.
Absolutely.
Well, thank you for coming in and talking and really helping us understand the financial part of things and learning more about how we can get our medical professionals into a home if that's the right thing for them.
Yeah, absolutely. Thanks for having me, Maria. Appreciate it.
Absolutely.